Greetings and welcome to our weekly Mortgage Innovators podcast. I'm Margaret Chiavini with Caliber Home Loans, and this week is extra special. We are live at the Western Secondary Conference in the gorgeous Monarch Resort, and we have three of our elite sponsors here with us. We've got Ike with Funding Shield, we have Amy with SnapDocs, and we have Matt with Insellerate. Welcome.
Thank you. Nice to be here.
Thank you for having us, Margaret.
Absolutely. And now we'd like to thank our sponsor, Qualia. Qualia is a category-creating digital closing platform used by thousands of lenders across the country to seamlessly work with their title and escrow partners. By working better together, Qualia is powering lenders to deliver a differentiated closing experience for their clients. Through real-time communications, closing status updates, and workflow management, Qualia brings lenders together with home buyers and sellers, title and escrow agents, and real estate agents for a secure and seamless closing experience. Qualia is proud to have been awarded the Housing Wire Tech 100 Award for real estate, as well as CB Insight's FinTech 250 Award. Discover how you can work more effectively with your title and escrow partners at qualia.com/innovators. That's QUALIA.com/innovators. So, isn't it a blast being here in person?
Yes.
Yeah.
So exciting to be in person. Finally getting to see people you love.
Yes, exactly.
And perhaps hide from those you don't.
All right. That's so great.
You can just see the joy in people's faces being back together again in person. We were just speaking about the event last night, and it was just radiating all types of energy.
So true.
People being together and networking and sharing what's happened since we last saw each other. And what really surprised me was people had so many positive changes in their life since we were last back together. So it was fun to catch up.
Yeah, that's so great.
And it's nice to be here in beautiful Southern California as well. So can't beat the weather, and parties were great last night.
It's fantastic. We went on a walk this morning, and not a single blade of grass is out of place here.
That is to the California.
I saw people out on the Pelotons in the middle of the Great Lawn this morning when I got up, and I thought, I feel like a slacker.
That's so great. Well, again, welcome. It's so wonderful to have you, and we really appreciate all of you being an elite sponsor. What we want to do is have a conversation about your companies and aspects of the industry that we're facing right now. So I think, Amy, I'm going to start with you.
Sure.
What is the current state of adoption in the e-closing area, and how is it impacting secondary market?
Margaret, I have to tell you, I have been solely focused on this issue for the better part of 4 years. And the adoption we've seen in those 4 years has been absolutely incredible. I was thinking about this just earlier today, and how 4 years ago I held an e-mortgage boot camp. I know you came to one of those, Margaret.
Yes.
And Ginnie Mae was there announcing their 2020 initiative, right? That in 2020 they would launch their digital closing program. And I went to another conference where the federal home loan banks had their first joint meeting together, deciding that they were going to try to figure out how to accept e-notes as collateral. And so it's fun to have seen those projects actually come to fruition. So there's been a tremendous amount of progress. I just came from a meeting where we were talking about there's about 24, 25 warehouse banks now that are accepting e-notes, about 20 aggregators. So the adoption has been tremendous. We still have a lot of opportunity, if you will, right, for this to continue to grow. But what we've done as an industry in the last 4 years is really incredible, especially when you compare it to other industries. I was telling a story the other day where I went to the doctor and I forgot the piece of paper that I had to have for my procedure. and they sent me home, and I couldn't have it without that
Wow.
piece of paper. And I thought, that's an industry that really needs to go digital, right? Is healthcare.
Exactly.
And so people always, I feel like, dog on mortgage a little bit, like we're so far behind. But when you compare us to other industries, we really aren't. And we have to work so collaboratively, and that's really the beauty of it, right? Is we're all here together having these conversations about how to move that adoption forward even more in the next 4 years. And I can't imagine what it will look like 4 years later. And as far as the secondary market goes, one of our sponsors that is here for the conference, I know TMS, the money source, they started purchasing and servicing e-notes several years ago as well. And so as originators continue to ask their investors to do this, we'll continue to see the needle moving. And so that's the recommendation I would make is a lot of the originators can't move forward until their investors are going to purchase an e-note. And so that counterparty readiness is really what's slowing things up. So we need more warehouse lenders and more investors to move forward.
Except, you bet. And I love your point about compared to other industries, we're moving at an accelerated pace. And I would really say the great work that mortgageinnovators.com is doing, bringing everything together in one spot, that's also fueling the adoption and the progression. So that's great.
It is, yeah. You can't do this in a silo, right? You have to work with everybody. And I've been interviewing some people who are not from the mortgage industry lately and trying to explain to them the entire ecosystem and how it has to move together, right? Not alone. So yes.
That's great. Super. Thank you so much. Hey, Matt, how about what can we do to drive efficiency around our staff, and where have we seen ROIs really being delivered?
Sure. I think one thing is like workflow optimization, getting loan officers to be able to automatically prioritize their days. They're not spending, their time doing mundane things like who to call next or, looking things up, just automating the process of like prioritization, all of their workflows that they need to do, and really making it very easy for them to focus on doing their job. And anything that's automatable, from marketing to distribution, having all of that done for you. I think some of the other efficiencies is bringing mobile into the into the workspace, having a CRM that's fully mobile capable so that they can have everything tied into one centralized location. It integrates with their loan origination software, their POS. It pulls all the information into one centralized system that an LO can go through and look at when the rate lock is, or look at any information they need that's usually stored in a loan origination software, for example, and being able to have meaningful interactions and automate that process with the borrowers, taking them through that whole entire journey. The efficiencies we see on that is ultimately ends up being a lower cost per acquisition. You're able to identify what campaigns are working better, when the best time to call is, being able to increase your contact ratios, app ratios, obviously funding, and really just driving down your cost per acquisition there.
Yeah, that's fantastic. I think ultimately it's going to prove to be a competitive advantage. I mean, as we see margin compression, as we see business slowing down, I think it's going to be absolutely critical, the cost per loan and, how to maintain competitive advantage. So that's great. Thanks, Matt.
No problem.
Ike, it's always so fun to talk to you. Okay, let's see here. I have a great question for you. So we hear a lot about wire fraud.
Yeah.
For the people that don't know about wire fraud, will you explain to us what is it?
Sure, I can make it quite simple. Almost everybody has a credit card or an ATM card, and they've probably experienced some sort of credit card fraud. In our context, in our universe, in mortgage, the money when it's exchanged between parties is where this occurs. It's wire fraud. So at the last moment, someone comes in, a bad player, a perpetrator, a hacker, or a thief, in simple ways to call them, misuse information and take advantage of disjointed workflows or email compromise or phishing or hacking or telephone scams. One way or the other, they get the information altered where it shouldn't be, meaning the two parties that are engaged in buying and selling. So someone who's buying a home, their life savings, when being directed into an escrow account on an attorney, being hijacked. That's wire fraud right there, what we're talking about. The other is the lender sending in the money where they borrowed money from, and that money not making it to the escrow.
Wow.
The cost of that is just humongous. One, we already know it takes a lot of time to save to come up with a down payment for homeowners. Two, it takes a lot of time to find a home. And when you lose your life savings and you can't move in, everybody else who was involved in that process, who has helped you find a home, is hoping to make a commission, has provided services from different stakeholders in the process, they all lose income because the transaction didn't close. That's wire fraud in one essence. The other side of it is on the origination side. I think that's your second question to me.
Yes, it is.
Sorry, I didn't mean to jump.
Great.
I
No,
didn't
that's
mean
great.
to jump to it.
Yeah, we wanted you really to talk about how do we manage costs and increase margin through the origination process.
That's right. So most of the business today is online. Almost every business is online, and especially in the mortgage industry and our initiative with Mortgage Innovators Conference and so on. We, as Amy pointed out, are all collaborating to make the industry better and more efficient. And when you get into that, you learn there's so many disparate, disjointed parties in this very complex trade that you have to find automation that can help redundancies taken away, workflows efficient enough to cut down time. So it started off with, okay, well, it takes 90 days to get a transaction done, and it used to cost $1,500 for origination to get to that deal. And now you're talking about bringing it down to 27 days, 10 days. That's happening with all these efficiencies that we're bringing into play. And that brings down the time involved in doing a transaction and processing costs. All of those being trimmed down with these efficiencies are helping with margin. And in an industry that's been dealing with a lot of volatility, and not just looking back last COVID year, but if you look at the industry in general, it's so dependent on interest rates and being the largest contributor into US GDP. You're sometimes dealing with climate, you're sometimes dealing with war, you're sometimes dealing with so many other issues that dictate housing crisis, from the issues in 2008, the new regulations being put into play. The new regulations are so hard to comply with for all the check boxes that are regulatory mandatory issues to manage compliance, fraud, and risk are very hard to do in an industry where you're trying to survive up and down with the fluctuations. So these efficiencies help contribute towards margins. The ROI gets better. These products, living in the online world, these online solutions, fintech solutions, help become a profit partner and a sustainable profit partner to the originators in the business.
That's so great. And it really ties into what Matt was saying too.
Yeah.
The efficiencies, that's how we drive costs down and we increase the returns. So it's always time to innovate, right?
Yes, definitely. It doesn't stop.
Fantastic. Okay, Amy, we're going to go back to you. When choosing a digital closing solution, what should lenders keep top of mind?
Sure, that's a great question, and I want to tie into mortgageinnovators.com because when you start looking for that digital closing solution, that's a great first step, right? Is to go out there and even see who the providers are, who has the capabilities to do this, because in the 4 years that I've been focused on this, I've been a little bit surprised that lenders sometimes don't even know where to start looking for this type of a solution, right? So mortgageinnovators.com will first let you do that. And then really think about what your goals are. What are you wanting to provide and why are you moving forward with this, right? I've heard companies say it's because one of their core tenets is, to bring a lot of innovative technology to their borrowers, right? Or to really increase the borrower experience. Or to, like you mentioned, Margaret, bring a lot of efficiencies to their shop. So what are your goals and who can help you achieve those goals based on their models, right? And then what's your tech stack? Can it integrate with your existing technology? Can it handle the different closing types you want to move forward with? Do you want to do wet? Do you want to do hybrid, eNote, RONs? You need to understand what the provider can offer you.
Yeah.
And then can they help you scale? Right? We're all familiar with hello and goodbye letters. And I feel like there are some times where, I'm not speaking about digital closing in general, but where tech partners they integrate you, onboard you, and then they give you that goodbye letter, basically, right? Like, we're out of here,
Right.
and then deal with your technology and figure it out.
Right.
And so I think it's important, if that's not something that you want, that you find a solution that is really going to be there to help you and problem solve with you and set goals with you as far as scaling. So it's really important to find the solution that can help you scale, because we've seen so many companies implement and do a test or a pilot, or try this out for a couple of hybrids or a couple of V-notes and then never do anything else. And so they put all of this time and energy and resources into this, and then really haven't gained those efficiencies or satisfied any borrowers.
return.
So yeah, exactly, Ike. So it's important to make sure that you have somebody there to help you set your goals and achieve those goals as
Very
well.
well said.
Yeah, I love that. In a previous episode with our podcast, we talked about the subject of picking a vendor.
Yeah.
And just what you're talking about, Amy, the importance of, first of all, is that vendor going to help you scale?
Yeah.
Is that vendor going to help you with best practices?
Yeah.
Right.
Is that vendor going to help you with breakdowns that
Right.
you can see ahead of time and then take care of that? MortgageInnovators.com did a fabulous white paper on choosing a technology vendor.
Yeah.
And some of the points that you're bringing up are in that. And I love what you said, Amy. You don't have to reinvent the wheel.
Right.
You can go.
Exactly.
I mean, imagine this is a very high-tech resource center where you can check it out,
Right.
and see what's there.
Exactly,
Right.
and find that trusted advisor, to your point, right, Margaret? Like, we are experts in the solutions that we provide, and lenders can't be experts in all of those things.
Yes.
So
Right.
you need to find a company that you trust that can be that advisor for you.
Yeah.
And that's really what it's all about. And that's fascinating. I'm going to have to go look up that white paper. I didn't read it in advance.
Yeah,
So.
it's and maybe we can even ask our producers to put a link
Yeah,
at the bottom
definitely.
of this.
That'd be
But it's
helpful.
it's worth it. And what I loved about it is that it's short. It's not one of those 200-page white
Right.
papers where you need to be a lawyer to understand.
Or block off a lot of time in your calendar to get through it.
Exactly right. And get the thesaurus, get the dictionary.
So ADHD or ADD is not going to be an issue.
Exactly. Oh, that's so great. Matt, speaking of white papers, the Mortgage Innovators just released a new collaborated white paper talking about CEP, CEP.
CEP.
Would you please explain to us what is CEP
Sure.
and how is Insellerate evaluating the customer experience?
So it stands for Customer Experience Platform. And really what it does is it takes your kind of traditional CRM and updates all of the things that we feel are missing from the lender's lives. The ability to, as you were saying, integrate, first of all, making sure that everything ties into one centralized piece, and then automate all the processes. So having data intelligence where the system can grab and update current leads with their conversion metrics, or update them with their current loan information, and being able to use that data intelligence and those insights as actionable data.
Yeah.
And being able to execute the right marketing plans based on what type of lead it is, what type of loan that they'd require for, or would apply for, and taking them through the 3 different life cycles. You've got the lead life cycle, you have the loan life cycle, and the customer life cycle. And with every customer on average doing 7 to 11 loans in their lifetime, that lead life cycle is going to turn back into the customer life cycle turns back into a lead life cycle at several different times. You want to be able to capture that person and bring it back in over and over. So automating the customer engagement process, making sure that relevant messaging is going out to the person at the right time. If they're looking for a purchase, all the information needs to be about purchase. If it's a refi, it needs to be about refi. If it's jumbo loan, whatever the case is, all of that filterable criteria, you use as the ability to send out automated information that's relevant to that person. So incorporating a full mobile CRM that is available, so an LO can do everything on the mobile app that they can on the desktop, pulling in all their information from all their integrated tech stack as well. Built-in phone system, so for compliance, you can have calls recorded, you can have all of your text messages recorded and stored and date and time stamped. All your interactions with the customer are all stored and able to run inquiries around that as well. So the customer engagement portion, I think, is one of the top pieces. Whether it's text or ringless voicemail, social media, or even direct mail, having one system that can trigger the right thing for the right person at the right time.
What I love about what you're talking about is that it integrates perfectly into the conversations on efficiency and
Yes,
how
absolutely.
that is going to move returns. And then at the same time, we get to create a fabulous experience for the borrower.
Yes.
So this is what they call a win-win.
That's right. What I wanted to add was the real cost of not handling risk and fraud with this acceleration of embracing technology is something I wanted to cover, which I missed a little earlier. So I guess basically what I'm saying is that the cost of origination in this business has gone from $1,500 a loan to a transaction to maybe about $9,000 today. And by the time you get to that transaction, if you have a wire fraud just before the transaction closes, I wanted to talk about what does that cost. I did talk about how much money was lost in origination and everybody else who was going to make processing fees and underwriting fees and commissions as brokerage fees. Everybody's livelihood tied into this industry ends up not making that. But what does it really cost? I also talked about the customer. The savings are gone for life. There's a black hole in the industry today that they don't get that money back. No one covers it. We do at Funding Shield. So that's one part. And these innovations are coming because of this industry talking to each other, us being part of this kind of collaborative, and talking about these pain points and bringing these solutions forward. So what about the customer? As you said, customer experience matters the most. Who is the real customer in this industry? It's the home buyer. If they don't have the equity down payment, no one else is involved. And so the other side of that is the lender. If they lose the money, what does it cost them? The regulations today are such that if anything goes wrong in a transaction, the burden of responsibility of non-compliance or not processing a transaction as per mandatory regulatory issues ends up on the lender. And if the money is lost in a transaction, they're liable to report it, to get it investigated, to bring in FBI and attorneys. And by the time you go through that and the hours of what you put into it ends up being the following. It's an average mortgage loan today, let's say it's about $250,000, for example. The cost, not only you have lost $250,000 going into a closing that's been hijacked, it's gone because of wire fraud, but by the time you do the rest of it, reporting, investigating, filing, attorneys, and so on, it ends up costing you close to about $850,000.
Wow.
That's on the MBA website, mba.org.
Yeah.
So I wanted to cover that because it's quite important part of what you were asking me earlier about wire fraud. How does it affect? Why should we worry about it? Because that one loss can mean a lot to a company where if it's a small mom and pop mortgage originator of less than $5 billion in origination, that money can be half of your cash equity in the play. So it does matter.
Absolutely. The other thing that you triggered for me, Ike, is in addition to the real economic loss, it's the reputational loss.
Reputational.
No company wants to really have to fess up to the fact that this happened on their watch.
That's right. And at the request of, again, a member of CMBA and a prime bank in the US, we were asked to put together that solution. So we have a solution where a consumer can verify when they're being given instructions to send money somewhere. The bank and the lender facilitate this fintech tool from us to be able to leverage and ensure money is going to the right intended licensed party and not lose their life savings and hang up on a transaction where everybody gets affected.
Yeah, that's fantastic.
Yeah, it's coming
Yep.
a long way.
I love it, love it, love it. And kind of like Amy, to your point, we're much farther down the road. I think a lot of times I think about our journey with technology and innovation and efficiency like climbing a mountain. You know, when you climb a mountain, you feel like you're never going to get there. And then at some point you turn around and you realize,
Find yourself
wow,
at the top. Yeah.
I came a long way. So I love that positive attitude. That's
Thank you. Yes.
fantastic. Yeah, that's
Opportunity.
great.
That's what it's all about.
Opportunity.
Fields of opportunity.
Yes, I love it. Well, again, thank you so much. Could I just ask one more question to each of you? There are many people that could not be at this conference, although we have well over 600 registered attendees at the conference, so very successful. What would be one thing that you're taking away from the conference that you would share with someone who couldn't be here? And Matt, may we start with you?
I mean, I would say I learned a lot more about the end process, the closing process, and secondary market. There was a lot of information provided to me that being on the front end of the workflow portion of technology, I wasn't, I wasn't a very knowledgeable person about it at the end of the day. So I'll take that away. And then, as Amy mentioned, just the overall vibe of people being back with people again. That was it's special. This is pretty much the first thing I've done in relatively 18 months, I think. So
Yeah.
it was great getting to see some face-to-face time with people.
That's awesome.
Yeah, exactly. And I would add to that and say people lifting each other up, right? That was my takeaway last night when I went to bed. I was reflecting on the evening we had and thinking about how people were really lifting each other up and making introductions. And especially women. That really struck me that there were so many phenomenal, powerful women here that were helping each other out. When I got on stage last night, Margaret was right there, front and center, cheering me on, supporting me, right? Which meant the world to me.
Awesome.
And then there's so many people helping people new to the industry get educated about our industry, which is phenomenal as well.
Yep.
And so just back to the collaboration theme, like that's what I'm taking away from this
love
conference.
That. It's awesome.
Yeah, I echo what the guys shared. I think one of the things I noticed was that in person is obviously great, and getting to talk in person allows you to share experiences that maybe you don't get a chance to do on a virtual basis. And that bonding in this industry, it's famous for that, right?
Yes.
The networking in this industry is well known. People know each other for 20, 30 years or grow up with each other or from firm to firm, but still keep in touch with each other and continue. So that was really good to see, reignited again in person. And with technology coming into play, it's getting people even closer to learn from each other.
Yes.
So you're learning from social etiquette to business etiquette to business product. So it's been wonderful.
Yeah, that's so great. Well, thank you again. Thank you for all that you do to contribute to our industry and to Mortgage Innovators. And we really appreciate you being here. Enjoy the rest of the conference. And for our audience, we will see you next week.